Hello and welcome. And I'm your host, Konstantin Kogan. We're here at Holistic Investments, and I'm delighted to have an amazing guest today, Managing Partner of Blockchain Funder Funds, Aly Madhavji. Hi, Aly.
Hi, Konstantin. Thanks so much for having me on the show.
Thank you for being here. We've interacted multiple times before with your team and now with you personally. So really excited to start. And then as I notified you before, traditionally we have to throw the legal disclaimer that this content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or any other advice. Now we can talk about anything we want, right? But before we jump into your, amazing career, and I did research in you. You work in PwC, you worked in Royal Canadian Air Force. You've been in Royal Canadian Air Force. You've been in Microsoft, PayPal, Bloomberg. You're on a board of directors in 2 publicly traded companies. You participated in 100+ investments, and I'm sure thousands of due diligence processes, right? So let's start from basics, right? How did you end up being in blockchain?
Yeah, it's a really good question, right? So I think there's a few different aspects here that sort of all culminate and sort of lead to this path, being in blockchain. But, when I was originally at PwC, I used to travel all around the world, was exposed to a lot of different people. I was working on everything originally from assurance in Toronto, New York, to corporate turnarounds across North and South America. And I'd already started to get interested in the space and become aware of the space, and sort of that, sat there for a little while, and got involved in Bitcoin. And while I was at INSEAD then, so a couple of years later then, I was at INSEAD and decided to move full-time into the space. And so I'd already thought I was actually quite late to join the space. It was 2016 while I was at INSEAD, and decided to launch a startup in the space. And that was I think a real inflection point of not only having some financial exposure, but now all of my time, all of my effort sort of fully being in the space. And, of course, looking back, that timing was not so late, and it worked out quite well. And it's been an entire journey, right? It's gone from the entire ICO boom that you would have seen, or whatever you want to call it, the digital currency or ICO boom that we had back in 2017, to now investing in over 110 companies over those years, right? And now we're on our second fund. We've backed a lot of incredible businesses, some that are now, some of the largest in their segments in the Web3 space. And so we're really excited about the journey and the types of founders that we're backing, and, more excited, I think, than ever on the possibilities of where this industry is going.
Yeah. And recently you announced that you completed your fundraising, which is $75 million, in your fund. And it's not a traditional, your VC fund, right? So you back early stage and seed stage companies, but you also operate like a venture builder in a way, right? So can you tell us a little bit more, what's your investment thesis and how do you work with projects you invest in?
Yeah, absolutely. So the way that we look at this is very, very different from other venture capital firms, right? So when we started BFF, the idea wasn't, hey, let's go be investors and start investing in a bunch of startups and sort of just lay back, right? The idea was very different. It was, we love scaling one startup, and our mind is sort of all about, let's figure out how to solve problems. So why not do 2 startups or 5 startups or 10 startups? And so it just went to, well, we can then help, a bunch of great founders solve major bottlenecks and roll up our sleeves with them, and let's go do that for 5 startups, 10 startups, 20 startups. And so that was sort of the premise behind it. And that's why so many of our founders, have said we're their most active investor by far, right? And sort of most helpful investor. One of our goals is we want to be the first place where you come as a founder when you have an issue, right? Like most founders don't want to tell their investors issues because they're worried about what'll happen when they tell their investors. Like we're all about like, let's just figure out how to solve it with you. And, whether that's, founder challenges that obviously breaks up many companies to, customer challenges. Maybe it's like, an impending lawsuit. Maybe it's like a massive partnership you're working on. Like, come to us and we'll help you figure out, what the best steps forward are and how to go about it. And so that was the original sort of premise, and it's continued to grow in the way that we think about and that we support our startups, right? So, we've got, with a lot of our startups, probably like 30 of our startups, we have conversations with on a weekly basis, right? And we support them. We work on, how do we solve major bottlenecks that you're facing? We have minutes from every single meeting. We have a project plan with our companies around operations, marketing, tech, finance on a week-to-week basis. And we also have, for example, like designers that our companies can use for free. We have, on our team, we even have a trained lawyer, not to give our companies legal advice, but, if you're working on a partnership with a major Fortune 500, like, hey, drop it to us and, we'll help you think through it. If you need us to hop on a call with, the other side's lawyers and help you sort of be a friendly, like we can help you do that, right? So there's a lot of different things that we end up getting involved in with our startup. So it's a very different approach that you'll see us having versus other VCs. And part of that is because we invest so early, right? Mm-hmm. So when you're a Series A, Series B company, like you probably don't need as much of that, right? Because you're better capitalized. Like you can go figure out those things. You probably already have a full-time executive that can handle that part of the business and isn't sort of overwhelmed maybe as much anymore. And having said that, at an early stage, when you're pre-seed and you're launching your company, or you're sort of early seed stage and you still have a lot of these challenges, you're not that well capitalized, like it's a very different story for a founder, right? And we've done it. Many people on our team have founded companies and sold companies, and so we get it, right? In terms of what we look for, because that was the other part of the question that you had, we look at a lot of different things. So we've probably got about 90 different things that we look at when we analyze startups. We can't always answer all of them, right? So when you look really early at a startup, there's often times where we've invested in startups that, we've agreed on the deal before they were incorporated. We're literally on their founding cap table, right? That's early. Like that's as early as it gets.
That's a first check. Yeah.
I mean, it's literally like founding incorporation docs. Our names are there, like, right? And so there's many deals that we've done, in that way, or as first checks, or, shortly thereafter. And so a big part of it, of course, is team, but like everyone says that, right? And so we're still looking at like other aspects. When you think about blockchain, like we do want to see like a very strong technical component, oftentimes, especially if there's a lot of technical complexities. But take that even a step further, like the biggest thing we can measure early on in a company, and really in any startup in some ways, is the formula progress over time, right? So if we can see indications of very rapid progress in as little time as possible, like that's the best thing that we can measure. And this doesn't necessarily mean like crazy traction, because there's a lot of things that we can be looking at to see like, is this company moving forward effectively? So even oftentimes like we ask for like the internal detailed project plan or Gantt charts that the development team has. And like, we actually want to see the details and like, is this team actually moving forward? Like, are they getting these sort of all these different micro areas done? And like, how is sort of this puzzle coming together, right? There's other things like indications that this team is the best. Like we want teams that are going to be the best in the world at whatever they're trying to solve, right? But we're investing so early that you can't tell yet, are they the best at this overall thing yet? But like, what else can we measure to see that you're going to be the best at something? And I'll give you an example. And like companies oftentimes skip this at an early stage, and I don't fully understand why, because I think it's not that hard to do. But like we want to see that companies are the best at something. So take like, we see a very early stage deck, companies not incorporated, but they have like, or like just incorporated. They have the best branding we've ever seen, right? Or like world class, like AAA branding. And you're like, damn, like I need to talk to them, right? Or like you see that, you know, they have the best, I don't know, data room you've seen. And you're like, man, companies at this stage don't even have data room set up yet. And like they've already got something that's extremely organized. It shows that they're like very meticulous with like very minor details. And that's important because at the end of the day, if you're going to build a world-class product, you need to be meticulous.
Yes.
Right. So like already, yeah. So like when you can start sharing indications of that early, it starts making a very big difference. And so that's kind of the way that we think about stuff. There's obviously a lot more that goes into this, but that's sort of I think a pretty good idea of some of our thought process around early stage investments.
That's really interesting. So I already have a bunch of other like follow-up questions based on that. Like before we jump into it, because I want to hold this thought, like I have a very specific. I think a lot of people would want to know, because who are not familiar with your fund, what are the size check sizes, like, you know, like you're writing, and like again, then we're going to come back to the conversation, what are the other parameters, right?
Absolutely. Yeah. So, I mean, we typically write a first check of 200K USD. And part of that philosophy is, you know, we want, and so when you think about a $75 million fund, that is not a very big amount for a $75 million fund. And so the way that we think about stuff is we want to get under the hood very early, right? And we want to roll up our sleeves, work with the founders, and like solve challenges. And when we start seeing more progress, when we start seeing and getting more comfortable with the team and where this is going and the direction, and, you know, we start getting and helping and supporting around like pipeline development and like customer development, et cetera, and then like we're happy to go write larger checks. So then we write follow-ons up to 5 million into each company, right? And so that is also very attractive for founders because generally, especially in the Web3 space, one of the things that we found is there's not a lot of funds that are writing like consistent follow-on checks. And we've sort of built a model around like, let's get under the hood, know the team, you know, we support them early, but then we go write those follow-on checks. And so it supports them a lot to get subsequent rounds completed.
How fast are you talking about, like when you're ready, and what the team has to deliver, like which milestones to be eligible? Let's put it this way.
Yeah, it's honestly on a case by case. The fastest follow-on we've done is under 30 days from first investment. So it actually can be very fast if we like the team and we like the progress, and we already see like interesting things happening under the hood. Mm-hmm. Others can take longer. So we do actually typically when we're investing in a company, like we do write out internally, like what do we kind of want to see from this company to be able to de-risk this deal and write a much larger check and then help them drive like a larger round. And then we actually share this with the company. So it's not like we just keep it internally. We actually share it with the company. We say like, we want to see like these key metrics. Like we'll discuss with them what the key metrics are. And then, you know, once we're aligned on those, we'll say like, we want to see this, this, and this to be able to go, you know, help you drive a Series A, or to help you go drive like a seed round or whatever that is. And that becomes very valuable because then like there is clear measurable things as a company we're working towards with you.
Perfect. So there are KPIs. So that's actually makes it easier for them to understand where you come in. And that means you're talking about a different valuation already, right? So my question would be like, yeah, that will be like either bridge round or Series A, right?
Yeah. So a lot of cases, I think what's really cool about the way that we structure things, and that's like very founder friendly, is that once we write that first check and we're under the hood, if we like the progress, like we can just go write another safe with like a valuation cap. So we'll just be like, hey, let's do this at a 20 million when we originally came in at 10, and like the founders can say yes or no, and like we just keep going, and our companies are better capitalized. We're obviously, you know, happy about it because we have, you know, a better ownership stake. But we also see that, you know, it allows our founders to then focus more on what matters most, which at the end of the day is going to be product development and customer acquisition, right?
Yeah. But that might be challenging. I was just thinking like, you know, that they first still need to complete their first round, right? Because if you're writing the check too fast, right, and you're actually increasing the valuation, right? And and they haven't completed the first round, let's imagine, right? So that
So,
creates.
so normally the first round would be done. If not, like maybe we're investing more at the same terms, right? But like typically when we're coming in, we're also like so one of our goals as a fund, and this is also maybe like pretty unique. One of our goals is to become the most transparent fund in the world. And so the way that we do this is at the same time that we make an investment in a startup, all of our investors know about it. So they get access. All of our investors have a real-time dashboard of all of our deals, and they can see the deals that we do. We share our materials. We're happy to share our memos with our investors. So like, and it's not just the big investors in our fund, it's all of them. So when we go back, companies early, like we can go write a follow-on check on the same terms at higher terms if they're done that round. Typically when we invest in a deal, we bring a lot of other investors that like to, like what we're doing, that follow deals that we're doing, a lot of co-investors, some of our LPs. But one of our goals is to become the most transparent fund in the world. And so when we do a deal, we actually share it in real time with our investors, and they can see, the materials, they can see the deal we back, they can see the valuation, they can even see our memo. Oftentimes we even share our memos with the startup, so that they can understand like the gaps that we see, they can understand like the way that investors think about this. And it also helps them to answer questions more effectively, when they are also talking to other investors.
Mm-hmm. Yeah, that's very helpful to know. And I think there's a lot of challenges that comes with early stage projects, as you mentioned. Like, so I want to give you like a practical example so we can like brainstorm, like, what would you do if you imagine you have a layer one, right? Which has an amazing tech. They already did like a lot of work on the technical side. So it's sophisticated. They already have some partnerships, some traction, but not a lot. And now they're raising a fund, but they're raising funds, and the challenge there, like they're still missing some of the core elements, right? They need to onboard more people, so it takes time. They need to progress with certain things, like in business development, which might not be their core expertise because they are actually focused on the product, right? So, how would you start with that? What would be the main and the most important part for you to review?
Yeah, it's a really good question. We actually have a case, I would say, that's like fairly similar to that right now, right? And I'm happy to talk about it. Like, I think one of the worst things you could do is like not talk about challenges. As a startup, there's always challenges, right? Like that's what you're sort of signing up to, and so it's solving it. So, we recently invested in a company called Koinos. It's a layer one gasless blockchain, and we actually have a very we actually have a very big belief in high throughput industries. So think about like entertainment, gaming. This is one of our sub thesis, where we think that these industries need to essentially operate on extremely high throughput blockchains. And the only way to be able to do that, we think in the long run, is actually to have gasless blockchains. Mm-hmm. And the reason why they have to be gasless is, and I can maybe give a pretty easy example so that everyone can follow. Like take gaming, right? There's a lot of gamers out there. I'm going to simplify the numbers. Let's say there's 1 billion gamers in the world, right? Just so we have easy math. Let's say there's 1 billion gamers in the world. And let's say now you're trying to build like a first person shooter game, right? So now let's say there's like 100 million first person shooter players, as an example, just so we have, again, simple math. So now you got 100 million first person shooters, and you're launching a blockchain game that's a first person shooter game. Now, if you built it on, existing layer ones that are gas based, so take like Ethereum, Solana, like there's many others that you could have as an example here. Like the problem is, if you launch your game on those blockchains, to be able to play the game, you still need a wallet, you need gas, and like all of these aspects that sort of make it much more complicated. And so your actual market size, instead of it being 100 million gamers, is actually the Venn diagram middle of the 100 million and the people that end up holding that token. So say Solana or Ethereum or whatever. And so now that market size just went from 100 million to like 500,000, right? Or 1 million. And so now you actually already cut 99% of your potential market because of this problem. And so the founders at Koinos are the main sort of people behind Hive and Steem. If you're familiar with those blockchains, extremely high throughput blockchains. Splinterlands, one of our portfolio companies, was built on Steem, now on Hive. They've done billions of transactions on that chain, right? And so we actually think that this is a very important innovation. Having said that, this team is extremely technical, probably one of the best in the world at solving this problem. But there's still gaps. Very early team. We think there's still, areas for improvement around, say, like marketing, potentially around business development, getting more projects on it. So it is around that problem that you're mentioning. For us, we think this is a more solvable problem than having really great marketers and not great tech, right? Because that's not a good sort of formula for success, in our opinion. Even though you might raise that first round more successfully or that second round more successfully, like it will catch up to you if your tech is not great, right?
Yeah.
Especially when we're talking about like very technical solutions, right? So that's sort of an idea, and like we work with them very hands-on around like, how can we help them improve around aspects around like fundraising, around business development, helping them get projects on board and like strategies around that. So these are all areas that we are working with them on pretty actively.
Now, one thing that not a lot of people are talking about, like I just want to address, since we're talking about challenges, right? Technical audits, right? So curious, are you doing it in-house, or you're hiring some people also like to assist you with like second or third opinion?
Yeah, very good question. So there's a couple of different aspects here. I think there's one like, say, pre our investment, and one that's, say, post our investment, but supporting like the companies around making sure that they have extremely robust tech, right? So pre our investment, we do have so we've been running this private network called the BFF Global Expert Network. We've got about 340 members. We've been doing this for 4+ years. And part of our objectives there is to have someone that's the best in the world at every little thing, essentially, right? So when like a problem comes up for a startup, like, hey, we've got someone that's the best in the world at scaling remote companies. We got someone that's the best in the world that's done like 14 billion in debt deals, as an example, or like any obscure problem that could come up. Like we probably have someone, right? Like we've got someone in there that's former owner of the Yankees, or like all sorts of different things that like you want to integrate into the sports world. We'll put you in front of some of the best people that can help you do that, right? And that's actually very important. So in there's a lot of very specific technical skill sets as well that, founders or CTOs that have scaled, companies to hundreds of millions of dollars, or, that have managed technical teams of 40, 50, 100 people. And then you can go get advice as a CTO even, right? So there's all of these different aspects, or like one of the best scaling engineers in the world for like specific, types of scaling, right? So that's sort of how we think about it. And then we tap some of our experts to help solve this problem, right? So when we do have, something that's very relevant, we tap one of our experts to then help give us a second opinion, hop on a call with them. Some of them have multiple exits, etc. We also have, and now this part goes to both of those. So pre-investment, post-investment. We also have some of our LPs that run, for example, some of the largest technical auditing firms in the Web3 space. Mm-hmm. And so oftentimes we'll also tap them for feedback, for opinions on deals, and then also potentially to help our companies with technical audits. We've been very gracious because one of our investors has also even been doing free audits for some of our companies to help them early on when they are more cash strapped. Maybe they've raised less than $1 million to date, or just about $1 million. Then like they're also helping a number of our companies really beef up for like their initial product launches, betas, alphas, and helping them do that, even at no cost, which is, pretty incredible.
It is, considering some of the audits might be very expensive, because, if we're talking about like pure infrastructure, it can go like tens of thousands of dollars, right? So if not more.
We've seen it actually gets even crazier. We've seen it go to over $100,000 a week in bull markets. It's just crazy, and you still can't even get someone to do it sometimes when it's like that crazy in the market. So these things do get really, really expensive.
Oh yeah, I'm sure the top companies are pretty expensive. And no, that's fascinating. I think the support you provide to the projects are very important. I think you have a very interesting thesis. Like, how do you support? Like, but that's like also I'm thinking about like how many companies are you able to invest during a year?
It's a good question. So With our new fund, we do have a pretty aggressive target. So the goal is to invest in over 200 companies in the next couple of years, or so in the next few years. So that is a lot. Your typical fund probably invests in like 20, 30 startups, right? We're just sort of looking at 200. To give you an idea, that means that we have very large funnels. I mean, I think in April, if I'm not mistaken, we looked at 632 deals, right, alone. And in May, I think it was closer to like 350, 400, right? But like we look at a lot of different companies, and then we might back like last month. I think we backed in May. I think we backed two. In April, I think we backed five. So it starts giving you an idea of the pace that we're also moving at and the number of companies that we're looking at.
Well, first of all, I want to say that the fact that even during, let's call it what it is, it's a bear market still. Right? So the fact that you're still invested in this market is already remarkable, right? Not a lot of funds are active. Some only the top and only the smartest, I would say, because this is the perfect time to actually select the people who have long-term vision, right? And the other part I want to elaborate, right? I think like we should talk a little bit about there's no magic wand, obviously, and there's no magic formula. However, you mentioned already about a lot of things that can help people to fundraise, but maybe some other aspects that you missed out, that like top three. Let's talk about like top three things to even pitch you. What would be their recommendation? Very practical to focus on, right? You talked about being meticulous and being organized and to showcase why you are the best in your space, right? And let's talk about maybe a few other things.
Yeah, I think having like very like fairly detailed plans of what are sort of your major milestones, like what have you accomplished over the last few months, what are sort of the things coming up that you're going to hit in what time frame. Do you have clear metrics, like even in 6 months or in 12 months, like with this money, like, hey, we're raising 500K, we're raising $1 million, $2 million, whatever. Like in the next 12 months, these are the numbers and metrics I'm going to hit. Like, because it's not even about the numbers. It's not about, are those numbers correct or not? Like that's like a whole different question. But I think it already signals that the founders know what the key metrics are and what they, or at least have an idea, at least have thought about it. Maybe there's others that are missing. That's not even a problem, but it's showing us that like they have a clear idea. They have an idea of how they're going to get there. Then we can like dig in a little bit more, like how are you going to go achieve that? But there's a lot more substance there, right? There's different things, like we'll oftentimes ask for financial projections of really early stage companies, like pre-seed, early seed stage. And like, we know they're wrong. They're actually never right. Okay. But we're not asking for seeing if they're right. Like, I don't care if you're projecting 50 million of revenue next year or 2 million or 1 million. Like, it doesn't actually matter. Like, what we're trying to understand is, does the founders actually understand all of the different variables as part of the equation and all the levers that actually allow this business to scale and allow them like to sort of signal to us that they know all of the different aspects that are going to be potential parts of making this successful, right? Because if they know it and they're aware of it, then it allows them to not get blindsided by anything, right?
Yeah.
And as a startup, like things change. Like we know the business model is probably going to change. It happens a lot. We know that little things are going to pivot. Customers are going to probably ask for different things. Like that's just normal.
Now,
right?
I'm curious with this said, I'll ask you more like a tricky question if you're able to answer, right? So what is your success ratio and how many projects do you believe will survive? Like let's say from the portfolio of 110 companies, realistically, what do you think is going to be the survival ratio?
Yeah, it's a really good question, right? And I think this is a question that's very relevant for like any venture fund. I mean, there's a couple of parts that in the way that I'll answer it, right? Like it is very early at the stage that we invest that like our failure rate is going to be, higher naturally, right? Mm-hmm. One of our objectives in the way that we support our companies is obviously to, one, help our companies, decrease that, failure rate, but two, like increase their runway, increase their chances of, having a good shot at testing out, say, this thesis or this plan that they have, right? Or this vision. I would say right now, out of the 110, realistically, probably something like 10 have shut down, which is not too bad.
Yeah.
Having said that, there are companies that, you know, are struggling more than others, and they might be struggling in different ways, right? Like we have companies that are crushing it on revenue metrics, numbers, but maybe are struggling more with like a little bit with like fundraising, as an example. But then you get companies that are the opposite. You have companies that are, you know, very early investments that we've made that, you know, go raise major amounts of money, but then they're really figuring out like actually getting the product out and figuring out product market fit and stickiness and like making sure that retention numbers are strong. And so you have all of those aspects. And then of course you've got like the outlier major companies. I mean, we're the first investor in Splinterlands. We own you know, a low double-digit percentage there, and you know they've been extremely successful. I think they might actually be right now, if I'm not mistaken, the largest blockchain game from users and revenue perspective right now. But whether they're first or second, I think it isn't. You know, we came in at the start basically at a 5 million valuation.
Equity.
You know, we're also on the equity side, correct?
Yeah.
We're also the first investor in Altered State Machine, which was one of the first companies at the intersection of AI and Web3. And I think both of these are really good examples, right? Like, and this is also part of the reason why we don't follow other investors. So when we made the Splinterlands investment, they were one of the first games at the intersection of blockchain and Web3, like, right, and gaming. And you know, we were like, hey, this changes everything. But at the time, nobody in the world had a thesis on gaming and blockchain, right? And so when we went, like, I probably took this to 100 investors at the time. Some of the biggest names in the industry still today, some of them are no longer around. And nobody got it, right? So everyone was like, literally like, why blockchain and gaming? It makes no sense. Why would you collect assets in game? Like these were all the comments back in the day. I mean, I'm not going to say who, because a lot of these firms actually have made now many blockchain gaming investments, but nobody would do it with us. So we did it by ourselves, right? And we learned sort of from that point, hey, like there's no point in following others because like it doesn't make sense. And then it sort of came around again with ASM when we got involved in Altered State Machine. So they're one of the first companies at the intersection of AI and Web3 in 19 when we backed them. And it was the same idea, right? So we're on their founding cap table as well. And you know, there was one other party, I believe, that backed it as well early on, but nobody could really understand why AI was sort of relevant for Web3 and gaming. And you know, later on, people obviously now everyone's talking about AI, but at the time it was like, that's so weird, it makes no sense. What would you use this for? And we're like, there's incredible possibilities. But you know, we recently launched the world's first AI soccer football league with FIFA, right? As an example, and all sorts of other stuff that we're doing. And so there's a lot of really, really cool aspects that you can start to build here around this. And they've just raised a massive round that I think will get announced soon as well.
Well, first of all, I want to commend you on your stellar conviction, because it takes a lot of efforts and I would say guts, you know, to have your own opinion, right? In this world where a lot of the deals, as we know, they've been followed up, like, you know, let's say A16Z and Sequoia invest, and everybody's, oh, well, they deployed, so we must trust their due diligence process, right? And we've seen where it went wrong multiple times. I don't want to go into very recent news, what happened with big companies, really, really big, and who were saying like too big to fail. And I'm thinking, like, you know, that this is probably one of the most important things that I see a lot of emerging like venture firms that are actually having the same idea as you. They have a very they're open-minded to collaborate, but at the same time they have a very strong conviction in their thesis, right? Which this is what you want from your investor, especially early on, like who believe in you no matter when nobody else's will, right? So I think that's amazing, and I'm sure that a lot of companies, you know, that you invested in, they feel that practically, right? Which is very important. Now,
no, absolutely, and it goes both ways actually. So
yeah.
like we have very high conviction, but oftentimes what we found is other VCs or family offices now like loop us into deals that they're doing, and they'll be like, what do you think about this? And like, we'll join the calls and we'll talk to the founders. And, actually yesterday I was talking to a fund, I'm not going to say which one. And they were like, yeah, I remember we were on this investment committee with you guys. A few other funds were on it. And we were looking at, these deals. And you were the only one that said not to do it. They ended up doing it. It's been a disaster. There was also one of the world's largest families was going to put in $100 million check into FTX. And they called us and they're like, hey, what do you guys think? Should we do this deal? This is like obviously FTX's hottest company on the street at the time. And we explained like, don't touch it. And here's why. And we actually explained our reasoning, and they didn't end up making the investment, and FTX went under. Obviously, tons of people invested in it. And we got a note from them saying, hey, we remember, thanks for helping us dodge a bullet there. And I think a lot of these things were actually avoidable and like very clear. I'm still surprised that some of these things people haven't been able to follow and don't fully understand, but
I'm not, unfortunately, and moreover, I've talked to several like sovereign wealth funds and pension funds that invested in FTX. Like, think about it, pension funds, and when I asked them like openly, the answer was like, well, we were advised from one of those top names, right?
And honestly, they just didn't do due diligence. Like, I've talked to enough, it wasn't sufficient. I think this is still boggles my mind, right? Like, people still think that FTX created FTT, the token, right? But it was actually created by Alameda, and FTX was obligated to take 25% of the revenue and buy back FTT. Like, I'm not going to go into all the details, but think about who they were buying it from, right? And whether that was right. And so, but like, then when you're thinking about revenues, you got to take off 25% because you're basically taking 25% of your revenue and burning it from FTX, right? But you don't get to keep the tokens. So that's actually like a massive drawback to that investment. And like, a lot of their investors didn't even understand that this was a thing. Like, because I talked to them after the fact and they still didn't know about it. And I was like, how do you guys not know about this? Yeah. So I don't know. It's to me, it's surprising.
It's a sad story, but like, again, like I'm sure there's a lot of coverage. I'm sure you covered it, a lot of FTX North, or as I did it before, and like, with articles, everything. What I'm thinking, it's a perfect segue to actually talk about what's happening right now. Right now, we're in June 2023, and we have some major other issues, right, which are actually pertaining to Binance and Coinbase. Now, they didn't do some crazy, shady things like that. They're actually regulated, exchanges which have very reputable, with very, I would say, very strict compliance, right? As much as they can. Obviously not perfect, but look, listen, Coinbase itself, it's a publicly traded company that was actually at a time when if you remember ICO boom, they were very closely working with SEC, IRS, everyone. Now SEC changes its stance and sues, it's almost like it's the only friendly, crypto partner, right? And a lot of people don't understand that. A lot of people are very depressed and thinking, oh my God, let's say US is banning crypto, end of the world, etc. So I want to, first of all, debunk a few myths and hear your opinion on what's happening.
Yeah, it's obviously an interesting story that's developing, and I think it's going to continue to develop over the next few years. I mean, I think that if some of those people had their way that are setting some of the regulation, this industry just wouldn't exist. And I think that's a very difficult, situation to deal with if you're an executive at one of these firms that are trying to do things by the book, be regulated, when the regulators' personal opinions might be that this industry shouldn't exist and there's no need for anything other than the US dollar or euro, right? And those are, not far off from the actual public statements made by, the SEC head. And so this is a complicated, I think, piece to deal with. And I just don't get it, right? When I look at this, and you take any innovative technology, I don't care. It doesn't matter if it's Web3 or if it's AI or anything else, right? As a regulator, your job, at least in my opinion, is to figure out how to not stifle innovation, help cultivate innovation, but make sure that there's guardrails to make sure the public is protected, right? Like that's essentially the reason why, you know, regulators on a broad level exist. And I think this is very different because I think they're actually just trying to stifle and stop this industry from existing to a large part. And at the end of the day, like we live in a global world now, like capital's global, it moves around easily, talent moves around easily. Like the US is just going to miss out on this, right? Like people are going to move. You're already seeing it. I know plenty of people that have given up, you know, US citizenship even, but like many people that have moved out of the US, and, you know, people like a lot of the talent that would even go to the US, so top international talent, are just not going to the US, right? And this is a problem long term. Like at the end of the day, the most successful societies are going to have the best people there, right? Like that are working, that are contributing to society, that are adding value.
100%. And I think that's the biggest mistake what US is doing right now. Like they're trying to play this game, utility security, and alleging that like 13 or 12 like, you know, crypto assets already listed are securities. Well, if they're doing it in retrospect, right? If they do it in the aftermath, like, you know, well, that's all great, but where were you when they were listed? Like, and the question is like, you know, like there was always like 3 different even positions, right? You know, if you take SEC, CFTC, and IRS, all of them have different interpretation what a crypto asset is, right? One should say it's a security, another will say it's a property, and third will say, like, let's say it's a commodity, right? So it's a huge mix-up, and I think you're right. The biggest problem that a lot of the founders we see, they actually incorporate companies outside of US. So who is winning? The taxes will go somewhere in Singapore, Hong Kong, or maybe now in Europe or many other places. So what I don't understand, like, what's the end goal there? Like, that's the biggest problem, and I don't think anybody understands right now.
I don't see it as just a tax problem for the US. It's a talent problem. It's an innovation problem. It's like, it's jobs. But then when you think about jobs, it's not just the short-term taxes from those jobs that get created. It's the skill sets and training. And so this is why, like, you see when like somewhere becomes and builds expertise around something, say like pharma, then it continues to consolidate. You get more talent there. It continues to build there. Or take semiconductors in Taiwan, right? Like you end up building a moat as a country around this, right? So it's not just the short-term aspect of taxes. They're giving up on this, you know, probably for the long run, right? And so there is a bigger problem around this. I mean, I think what's even crazier is the way that they look at these things. But then you see the IRS. I don't know if everyone sort of caught this story, but the IRS filed essentially a $44 billion claim against FTX, and they asked the judges to basically have seniority over all creditors, to my knowledge, right? And therefore that they would take any of the remaining assets potentially away from all creditors and all customers, which, like, I can't understand, but you know, it is what it is.
I think, you know, there's a lot of rumors that what's happening with the debt ceiling, like with the general overall debt, like, you know, that US is not having a great situation with its own economy, right? So now they're trying to find, like, you know, like almost like scapegoats. And of course, crypto, as one of the senators said, like, you know, crypto guys like made like billions out of thin air. Like, well, they can do it, and you know, we also do it, but we are US government, right? So he's publicly like saying, and many of them are saying that, guys, we need your money, we need it to pay taxes, you cannot just pay it globally, right? You know, even though the publicly traded companies here, like, you know, we're talking about Apple, Amazon, like, you know, they have all those loopholes, like how they can pay, like it's in Ireland and many other places, and it's legal. All of a sudden here, like, I think one of the challenging part is skip all the other madness, but they're also alleging that, let's say, one of the top projects, one of the top 10 layer 1 solutions like Solana, Polygon, Cardano, and many others are securities. So now we're talking about like a little bit more challenging situation where billions of dollars are already deployed into infrastructure of those ecosystems, right? So for them to completely, it's one thing when you're talking about like a small startup. Okay, well, they're going to be delisted from Coinbase. They're going to go to another exchange, right? But here we're talking about a lot of assets on the table, right? So, and I'm sure you guys are very close to some of those ecosystems. Some of them are your LPs, right? So I want to hear your opinion. What's going to happen to them?
It's a good question. I mean, the way I look at it, to be honest, is like the US is a big player. Like, I don't think anyone can sort of ignore that fact. But at the end of the day, if they keep going in this direction, like the world moves on. Like people will use this technology elsewhere. It'll continue to grow, it'll build, and it'll get over it, right? Like early on in crypto, if any of the viewers sort of remember, like China used to control a massive part of the industry, right? From everything from Bitcoin mining to, just a lot of the assets that were going into funding, early stage companies or early stage innovations. And when China banned it, I think it was September 4th, like the industry still moved on. Like it was a rough day. That was one of the worst days in crypto, historically, but it moves on, right? And now like the world's not as reliant on China with crypto, and is actually more of a US centric or US strong, at least from that perspective, on Bitcoin, right?
Actually, it's ironic that right now a lot of the miners migrated to Kazakhstan. Like Chinese miners like went to Russia, Kazakhstan. So if you look at the numbers, the hash power there, it's insane. They're probably number 2 right now in the world. So, like from this 4 years, like a country that is like like 80 million people country, which is a huge country itself, like with a lot of resources, but still like it became one of the top 3 miners in the world.
Absolutely. But I think that also tells you that like these things are fluid. As capitalists, as people are, like equipment can move too. And if, as an example, if Kazakhstan started having very anti, Bitcoin rules or against Bitcoin miners, like they'll just move, right? Like I think that's already pretty clear. And it's going to be the same thing with if the US is more hostile against this technology, people will move, talent will move, capital will move, and it'll continue, right? As long as other jurisdictions, allow it and regulate it. And that's what you're seeing in the Middle East. That's what you're seeing in Asia and Singapore and Hong Kong and many other places.
So in overall, you're positive that like, as they say, this too shall pass, right?
I mean, it always does, right? Like I think that at the end of the day, like we have this transformational technology that we're certain will impact many of the different things around us, right? And I think like we're still at a point where people don't fully understand the different innovations with this technology because it's early, right? Like, I don't know, I'll give you an example. Like people talk about NFTs and they're thinking about JPEGs and I don't know, monkey pictures, right? Like that's not what NFTs are in reality, right? Like NFTs are the first way in human history to track ownership in a digital world. Like this is vital to humans in our opinion, right? Like imagine how we perceive right now countries or places in the world that don't have property rights, right? Like you would basically say this is barbaric, like it doesn't make sense. Like how could you live in a place that like doesn't have property rights? You might lose your place the next day or it might get taken over, whatever. Like it's the same thing in a digital world. Like 30, 40 years ago, we spent no time in the digital world or maybe very little. Now we spend, went from 5%, 10%. Now we probably spend 50%. Or you go to maybe some of your youngest kids and maybe they're spending 70%, 80% kind of in the digital world, right? Like it's going to happen more and more. And therefore we need to be able to track ownership in a digital world. Like it's like a human necessity. Right.
And what's interesting about that, like, it's very underestimated because it's something still unknown. I think the ubiquitous like penetration into this technology, it hasn't happened yet. We haven't had this like bifurcation where people will actually go and enjoy it, because let's be honest, like in our industry we still have major problems with basic user experience, right? The wallets, like to even install a wallet, it's like it's already you completed a PhD, right? For at least that's what I try to explain to my mother. It was very, very complicated task. Unless I just sit with her and do it for her or show her like step by step, it would be impossible to convince her otherwise to do that, right? So those are obviously other challenges which we collectively as an industry solve.
I think this is like a very big problem. And what you saw that sort of culminated out of that situation, I would say, is people move to centralized products in Web3,
Yeah,
right? Like, and they weren't real, like fully decentralized products. They were extremely centralized products. And people thought that these were what blockchain stands for and means. And that's why, all sorts of people and, many parents, grandmothers, etc., were using everything from Celsius, BlockFi to, FTX even had some stuff that was similar, but, like simpler. And that ended up burning them, I think, by not understanding the risks around some of these products, right? And that they weren't decentralized. And I think that's obviously now also burned a lot of people in retail, which then takes a lot of time to reinstill confidence, I think, in people
for
to
sure.
come back, right?
But then if you think about it, we were talking about Binance and Coinbase, they're also centralized. And the biggest and the most richest probably companies in like the Binance is still number one in terms of like the revenues, in terms of the success. And it's a centralized company. But it plays an important role as a bridge between the centralized, the CeFi and DeFi worlds, right? So we still understand that like BNB chain, it exists and there's a lot of elements of decentralization there, right? But as a like golden goose, like who's bringing the money to the table, it's still an exchange, right? So and by the way, I remember which now you wrote an interesting research paper on Binance and ecosystem leadership in uncertain times, right? When that was in a time when an NC, right?
Correct. Yeah. So we wrote what I believe is the first academic case study in the world on Binance. We did do that with CZ, the founder of Binance. And, I think that there's a couple of things, right? Like going back to sort of your point around like centralization and exchanges, like I think the gold standard is transparency, right? And this is one of the big things that you can get from Web3 and blockchain that you don't get in real time, for example, from centralized public companies even, right? And so when you look at like decentralized opportunities, there's a lot of really, really cool stuff we can build as a society and as a future that gives real-time information that's much more transparent, that's much more reliable. Right now, there's still some challenges around like, say, like hacks on bridges or code issues or like different things that, we need to continue to work through and improve. When you take Coinbase then as the centralized aspect of maybe the Web3 space or blockchain space, I think that it is a really good, almost like a hybrid, because their public transparency is very strong, right? Being a public company, especially in the US, very high regulations, you've got, reputable auditors involved, et cetera. I think it gives you a lot more confidence. It's the same thing with Circle as an example. If you think about USDC, many people might remember, fairly recently, like USDC depegged. And I think it dropped all the way even below 88 cents. And
yes, I remember.
I probably got something like 100 messages that day from LPs, or that in like the subsequent like hour, 2 hours of that happening, of our LPs, and people just freaked out in the industry being like, dump all your USDC, get out of it. And we actually responded with a very lengthy email saying, we're fully aware of this. We know it's in progress. We've converted all of our other stable coins to USDC, and here's why. And we actually put all the reports, why we believe that it was the most liquid and most reliable stable coin in the industry. But we did this while it was depegged, and we ended up making a really good upside on it. But I think it's
guaranteed.
yeah, exactly right. But it's the conviction and the transparency of knowing where something is reliable and something's not. When you take any other centralized exchange, like we do believe there should be more transparency. Like we want to see world-class auditors involved. We want to see, like, we don't think it's very difficult to do an audit in Web3, right? Like even as an exchange, like essentially if you audit cash, you're pretty good. Like all you have to audit is like assets, deposits, and then like what's in cash and what's on chain,
I would
right?
I would respectfully disagree that this saves you, because if you remember, FTX was audited. So 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 what I think is like proof of reserves, what CZ actually suggested to do, which a lot of exchanges are now like implementing, which is on chain and showing the exact like, ratio of liabilities to assets. Like I think it's a little bit more efficient and showcasing like giving more confidence.
It can. I hear you. Like I think with FTX, it's a little different. Like they were essentially at IOUs. Like that's not the same as cash in a bank account and deposits like on chain and seeing sort of what stable coins are holding. So like I think there's a like any one that's reasonable that looked at this would have known that this didn't make any sense, right?
No,
Like
I agree,
even
but
as a fund, and we're a fraction of the size of FTX or any of these other guys, and like we don't recognize tokens at market value. Like we do a Black-Scholes model on every token position and take a massive liquidity discount, and it's a best practice. It's a normal thing in finance, and like we're just surprised that FTX wasn't doing this and their auditor didn't bring this up, right? Like it's just standard. It's pretty
But
standard stuff.
here's exactly what I'm my point. So I agree with you, but this is the challenging part. When you say with reason, with experience, there's only few people like you who are like who have your own opinion, number one. Number two, who have even the ability to analyze and scrutinize those things. If you think about the retail, they have to trust someone. They have to trust auditors. They have to trust regulators. Now you're looking at the audited results. They cannot even like intellectually go into the balance sheets of FTX and actually, oh well, they're lended like a few $billion of their own company to Alameda token. They didn't have this ability. So what I'm saying is like, unfortunately, we live in the world that is not perfect with human beings who can be bribed. I don't know what happened there, but like I cannot believe that a top auditor somehow just closed their eyes and like didn't see what was happening, right? So, but that can happen again. So with what you're saying, I think it's a cautious like message that guys, like you have to verify it on multiple levels. And I think on a programmatic level, we should put the reserves on the table to showcase there's enough money to be paid at a certain period of time. You see what happened with the BNB recently, right? Even though it went down because of the lawsuits, like one of the first communication channels from Binance was very efficient. They told guys, we still have all the money, we have amazing revenues, and that kills majority of the criticism. But what I wanted to ask you also really briefly about, like, as a summary in your research paper, how did they even become so successful? What was the key in the beginning that they made to number one?
Yeah, it's a very interesting story, right? And I think we're probably the first to cover in as much detail as we did from an academic perspective. And so Binance launches June 17. I believe, if I'm not mistaken. And it's a very different industry, right? I mean, FTX wasn't there, no longer are they there anyways right now, but there is a major gap, I think, in international outside of the US markets, especially for altcoins, right? And I think Binance was the first. So given CZ's background, working on trading systems, I think this was like a big advantage as well. But, one, they built their own tech that was proprietary. They were able to do it in like a pretty strong pace. He obviously ran an ICO pretty early on to help them, basically, get this off the ground.
Mm-hmm.
But pretty quickly, like he was very transparent to the community. I think like we're very big fans of founders that try to build in public and like share what's happening, be quite transparent. And he was, right? Like he was quite transparent pretty early on. He was able to make some key hires. So he brought over executives from other major exchanges that were, Chinese exchanges, but like quite large sort of.
There were some of his
executives that came
colleagues.
over.
He used to work at OKCoin, so some of them
Correct.
he worked with, right? So
Correct. And so we like those aspects, but I think the biggest thing was just the simplicity and making this very accessible for users and very easy to use for users. Because I remember at the time, like I was trading on all sorts of exchanges, and the amount of times where trades failed was crazy high. Like trades would fail all the time just trying to buy coins that weren't Bitcoin. I mean, even Bitcoin sometimes would fail, but like there would be a lot, like even on Kraken and stuff, things were failing, right? Like Bittrex, like wasn't what it was then, sort of subsequent to that, and now I think it's sort of declined as well again. But you know, I think it was a very different world. It was really good timing, but I think everyone just recognized how meticulous they were around user experience, UI, UX, and then the onboarding experience, right? Like was actually pretty smooth. And I think that had a major impact, and it really just took like Asia in large part by storm originally. And a lot of people across Asia that were trying to trade in this stuff were having trouble on other exchanges, quickly moved over. And then I think the craziest part was, you know, the day before the China ban, they actually moved all of their operations, and they got tipped off. They moved their operations overnight, you know, worked all night, or got it all back up. And then they moved again and again. And so there's a couple more moves after that. But, you know, I think it's pretty incredible, the story fleeing almost like China and the, you know, the Chinese ban, and, you know, all of those different aspects that sort of happened. You know, Binance has some of the best agility in the industry. And when you look at how rapidly they launched like many things first in the industry, right? So not only the exchange, but their ability to launch altcoins at sort of very quick paces, the ability to launch like their launch pad. You know, they had their incubators, they launched BNB chain. Binance is, you know, one of the most agile companies in the industry, right? So when you look at not only at the record pace that they launched the exchange, you know, they launched a number of other things first, from like the launch pad to BNB chain, you know, a lot of the other aspects that they sort of did across the industry, I think has been very impressive. And they've, you know, been pioneering a lot of stuff across the entire Web3 ecosystem that, you know, we think has been a great sort of standard for startups to really follow and live up to.
Yeah, no, I couldn't agree more. I think they are doing an amazing job, and there are a lot of, you know, controversies, and the price you pay when you're number one. There's a lot of the people who want to attack you. There's a lot of people who have their own opinion. What you're doing is great or not great, but they've been consistent, and they've been trying to show amazing quality and try to comply with all the regulations in the world. And the rest, I will just not comment, because, you know, latest news, like I will leave it to journalists and regulators. But
I think what we would want to see just on that is, like, as regulators are giving them licenses, we've seen it now in a few places. Like, we just want to see regulators dive deeper and make sure that they know sort of the financial position and the health, and make sure that, like, you know, people are protected. And I think that's sort of also a role that regulators can play as part of this sort of equation.
yeah, I couldn't agree more. Each jurisdiction they should have their own, like, you know, official opinion and hopefully research, you know, like to go into the, like a lot of countries right now have the Ministry of Digital Transformation. They actually do in-depth research. They actually hire competent people from the industry, right, who understand what are we even talking about. Because before, if you're taking people from Web 2 and I don't want to be ageist, but like boomers, right? Who never actually use any Web3 application, right? So how can you even allow such person to provide an opinion on something they don't fully understand? Unfortunately, I think that's not like possible, right? You know, so therefore we have those like differences in, like, you know, and in a depth of what they're talking about. There are people who are very competent, and talking about Gary Gensler, who actually is very, very competent. Like, you know, he actually was given courses in MIT on blockchain, right? You know, but different problem, which again, you know, and then you have other people who are just populist and simply trying to provide like for different agendas. I think it's very important to differentiate people who genuinely want to change the world to be a better place and apply this technology for the greater good, or people who use it for their political agenda. I think it's also fair to distinguish those positions, and not only in the United States, I'm sure anywhere in the world. But, you know, we want to talk about like the positive aspects again. Like I you know, I really enjoy learning from you, Aly. Seriously, like, you know, I think we can do like a 2-hour podcast easily, and, you know, the time will fly. So, but we'll save it for another episode, if you don't mind, to create some kind of expectation. And I have a surprise for you. You know, I never notify my guests about this, right? Because you notice that the name of the the show is Holistic Investments. So besides what we're talking about, which is investments, is making the world a better place, it's also about a meaning. So I have a question for you, which I haven't prepared for you, so you're going to answer very sincerely. What's the meaning of life to you?
It's a really great question, and I mean, to me, it's pretty simple, right? It's to make the world a better place and to help build a better future for the next generation. And that's in large part why we do what we do, right? When you think about how we support founders, the goal at the end of the day is to help these founders build out these visions and then help make the world a better place in all of these different aspects, right? And collectively, it's going to make a material impact on the entire world.
Beautiful. It seems like you were prepared.
Not at all.
That's amazing. Like I really, really appreciate your time, Ali. Like, and I will share all the links. I know you're active on, LinkedIn, where else? Twitter, where else people can find you.
Yeah, I mean, those are great starting points. And then, if you are working on a startup, you're trying to build, something incredible that can help change the industry or solve a major problem, feel free to reach out. LinkedIn, Twitter, but even on our website, we do take submissions. We look at every single one that comes in through there. We've actually made many investments, even for startups that have just come to us cold. So we do approach, and we do appreciate if you do reach out and share what you're working on with us. So definitely feel free to reach out anytime.
I'm sure people will reach out. Thank you so much, Ali, and I wish you to build more crypto unicorns.
Perfect. Sounds good. Thanks so much, Constantine, and thanks so much for having me on the show.
Thank you.